Hi, this is Yeho. I'm a option trader. Today is April 18, 2026, 10:09 a.m. Japan time. Today, I'll go over the market, touch on the FSB report, and also talk about the geopolitical movements, especially what's happening along the Straits of Hormuz. First, the Japanese market. The Nikkei closed at 58476 on Friday. Futures traded at 59000. It looks like we also reached 60000 in the night session. Volatility has come down quite a bit, now at 28.4. PRs is 20.55, and EPS has recovered to 845. From a chat perspective, it looks a bit like a double top. EPS is also showing a similar pattern, so that's something we should keep an eye on. That said, momentum is still very strong. Now, about the trades harmless information is still mixed, but overall, it seems like things are moving toward a reopening, or at least easing the blockade, and the market is reacting positively to that. Looking at the U.S., it's also very strong. The S&P is at 7126 and basically at all-time high. Moving index is at 65.69, so the bond market is relatively calm. VIX is at 17.48. So overall, both Japan and the US are in a very strong environment. Gold is back up to 4831, and the GBZ is at 28.95. So volatility there is also terrible. So we are seeing a strong rebound across the board, broad, and but in the environment, the FSB report came out. So let's briefly go through that and connect it back to harms. SFCB is still focused on leverage and liquidity supporting the market. In particular, they are highlighting the repo market. That's where investors use bonds as uh, collateral to borrow cash, and then use that cash to buy less asset. This mechanism is actually supporting the current rally, but at the same time, it makes the system fragile. Because if the bond market moves, everything can unwind quickly. We have seen this before during the Trump tariff shock. Bond volatility triggered a broader market move. Same things in August 2024 with the Bank of Japan shock. So structurally, market crash tend to start from the bonds. Right now, move is calm, but the question is it sustainable or is it just quantity fragile? Now, back to the strengths of harms. Previously, Iran temporarily blocked it and that triggered the market may crash in the February. But now the subject is shifting from Iran to the United States. And this is very important because the market reaction completely changed depending on who is controlling it. If Iran block it, it's energy shock and that's bearish for equities. But if the US controls or restrict it, it becomes the deliberate supply constraint. That's create inflation pressure, which can offset AI-driven deflation. And in this case, it can actually be bullish for equities. So the contrary is likely the market pricing in that the US is now the main actor controlling harms. However, there's a flip side. If the US lift restrictions, that could accelerate AI deflation. And then we need to ask, is that really bullish for equities? That's something we need to watch carefully. At deeper level, the home's issue is highlighting a fundamental problem. Energy supply constraints, it reminds us how dependent we are on oil and geopolitics. And this is where the story connects to space. On Earth, energy is constrained by gravity and the atmosphere. But in the space, those constraints removed. especially for solar power, efficiency increased dramatically. So, as space development progresses, energy constraints get weaker. We move closer to something like free energy, and ultimately leads to deflationary pressure. As technology advances, the cost across the broad decline. Eventually, even the value of currency itself it could weaken. And in the long term, if we extend human lifespan or slow aging, even the value of time could compress. And it does happens assets like real estate, which are essentially buying time, could lose value. But this process does not happen all at once. Software and digital assets will deflate first. Physical assets will follow later. So in the current phase, their asset may look like they are in bubble relative to everything else. The key is to understand it the timing. When does each asset enter the deflation pressure phase? In the sense, a space is a center of long-term structural change, and geopolitical tension actually accelerates the need for it. For now, the market is strong, but we are also seeing double top of 10, so we need to stay cautious. That's it all for today. Talk to you tomorrow. Thank you.